This is the market update for January 31 to February 7, and it will presented by Zhao Chenzhuang, Miaohan Sun, Jingyao Liu, and Riley Merrill. We are gonna start from overview the market over the past week. Okay, so first we need to focus on the economics condition. Dow Jones dropped more than 1,000 points in stock market on Monday. According to the State Ford on February 5th, we can see the index has lost 7% in just 2 days, marking a break in the tranquility that has characterized financial markets for much of past 2 years. The continued sell-off also signaled a potential shift in sentiment, and investors sought safety in U.S. Treasury, pushing yield lower. The S&P 500 fell 4.1% Monday, and Nasdaq Composite dropped 3.8%. The Dow Jones and S&P 500 are at their lowest level since early December. Meanwhile, the yield on the 10 years U.S. Treasury fell to 2.794%, down from a 4-year high of 2.852% on Friday. The forward markets, the steep past one-day yield decline in 5 months. This undoubtedly represents a huge challenge for both investors and the market. Okay, let's talk about some regulatory and accounting news. New Fed chair sizes up market sell-off. Fed Chairman Jerome Powell sets up the stock market in his first day on the job. The U.S. sell-off report through global markets. Economists expect that U.S. trade deficit to the widest in more than 9 years. Credit markets appear unbothered by markets tumult. Congress readings a stopgap spending bills to avoid another shutdown. Banks and closing breaches at a breakneck pace. Big rate orders surge, and Bitcoin tumbles. U.S. exports have been on the rise, just not as fast as import. There are several underlying factors, including strong U.S. economic growth and healthy consumer demand. A weaker dollar should help mitigate those forces, but in the meantime, political calculation may intervene. President Trump has taken steps to show he is ready to start implementing his long-promised American First trade policy. If he is serious, it will be tough to ignore China. The Asian nation accounts for close to half of U.S. trade deficit with the world. We can see the picture. Last month, China reported its largest ever annual trade surplus with the U.S. Okay, about the tax. The tax overhaul passed by Congress late last year may upend trends in charitable giving, including to the college and university. Harvard University again topped the list of fundraisers with $1.28 billion raised. Stanford University brought in $1.30 billion, while Cornell University rounded out the top 3 with $743.5 million. The new tax law also eliminate tax deductions for charitable gifts that can be used to snake premium seating at college athletic events. Currently, those gifts are deductible up to 80%.
So I did some research on recent equity, convertible, and debt financings. And the value of Blackstone's private equity portfolio climbed 6.8% in the quarter, and it outpaced the 6.1% gain in the S&P 500. The firm said the legislation Congress passed last year is largely beneficial for the company they own, and they reported significant increases in the values of their private equity portfolios. The tax laws moved to lower the corporate tax rate to 21% from 35% is expected to offset its limit on on companies' ability to deduct interest. And it had been a concern because firms often use substantial amounts of debt to buy companies. Thomson Reuters Corporation struck a deal to sell a majority stake in its financial information and terminal business for $17 billion to a group led by Blackstone. And data distribution and analytics is a very fast growing space, said Martin Brand, a senior managing director at Blackstone who led the deal in an interview. And private equity firms typically buy companies and work to improve their business by cutting costs or finding new areas of revenue growth in order to sell them for a higher price down the line. And the deal would be the largest corporate buyout to be done out of Blackstone's private equity funds. So moving on to the merger and acquisition. Broadcom raised the offer to Qualcomm to over $21 billion, and Qualcomm, in an effort to persuade shareholders to resist Broadcom's initial bet, and released a presentation last month and outlining a path to increasing adjusted per share earnings from $4.28 in fiscal 2017 to between $6.75 and $7.5 in fiscal 2019. And the merger will face deep challenges from international regulators and antitrust watchers, particularly over the company's dominant positions in parts critical to smartphones. The move aided at increasing pressure on takeover target in what would be the largest ever technology deal. Combined, the two companies would form the number 3 chip maker by revenue.
There are two important news about the revenue of the investment industry from the JP Morgan and Goldman Sachs. The first view is from the JP Morgan. They said the global investment banking revenues may decline 9% this quarter on low volatility and the sale of high-yield debt. Revenues from the trading fixed income, currencies, and commodities are expected to decline 30% in the 3 months through the December versus the same period last year, while banks' equities business may drop 10%. The analysis said banks with more exposure to equities will be preferred. They said overall investment banking revenues are expected to reach 3% next year. And another view is from the Goldman Sachs. The low risk of the recession does not mean that the risk of the marketing callback is low. A bear market risk index of the Goldman Sachs Securities Strategy Team indicates that the probability of U.S. stocks enter a bear market in the next 12 months is 68%. Goldman Sachs point out that U.S. shares are currently facing two major risks. First, raising wages, stagnant inflation, and sluggish productivity growth will reduce the profit margins of U.S. business. Second, although the quantitative tightening will not have the significant impact on the bond yields, it had the psychological pressure on investors.
In the global markets, after the S&P fell more than 4% on Monday, it triggered a global sell-off. There were many foreign exchanges that fell by even greater than that 4%. The German DAX index and the FTSE index based in England both fell by 4.7%. And the French index, the CAC 40, fell by 5.4%. The US dollar strengthened by about 1.7% compared to two of the major foreign currencies, but it weakened compared to Eastern currencies. In the commodities market, gold and oil prices declined with the recent drop in the price of U.S. stocks. The price of gold normally goes up when the stock market falls as a safe haven for assets, But because this was perceived to be a drop in, or a market correction, the gold prices declined alongside with those stocks. In hedge fund news, hedge fund managers are being cautious after this recent sell-off trend. There are a few different hedge funds worldwide that said that they will be strengthening their defensive positions and decreasing their exposure to high volatility stocks with this recent decline in stock prices globally.